discussing about the IPO, initial public offer. It's taken from Chartered Company Secretary 2023 by Mr. Amita Desai. Okay, what is IPO? IPO is nothing but initial public offer. What is the reason we are going to study? What is the bull market, bull trend, bear trend? What is the first of all? What is the meaning of IPO? I'm giving the glimpse about what is the IPO and what's the purpose of the IPO and what is the FPO and what is the purpose of FPO. Okay, these are the three types of the market. Market cycle phases, nothing but buy, sell and panic. Okay, buy, sell and panic. We going to why there is a need of the what is there for company secretary as a CS executive student. What is I am saying we are the responsible for the IPO. Nothing but we are in the process of IPO. As a company offers the securities to the public. Yes, whenever the company offers the securities for the public, whenever they require the money from the public, they go for IPO. Okay, process is referred as the initial public offer and a company said to go public. First of all, what is the meaning of GEL? In simple terms, private limited company becoming a public limited company. In case of private limited company, it's funded either through director, its own capital. Okay, but in case of the public limited company, it's funded by IPO. IPO nothing but issuing of the money, nothing but issuing the shares to the public and get the money and dump the money to the various for expansion, all other things. Entire process of IPO is nothing but he plays a major key role. Okay, and what is major IPOs? It is a database. Capital goods has been more than 72 IPOs. Advertisement, these are the types of the industries. Capital goods 72 IPOs. Advertising and media agencies 9 IPOs. And aerospace and defense 13 IPOs. Auto components 28, and FMCG 26, and computer 26, and residential commercial 44, and civil construction 71. And these are the types of the IPO. And actually there's the boom of the IPO right from the 1st January to 2024. You can see this is a percentage. Advertising, plastic, FMCG, these are the IPO. Okay, and health, these are the okay. What is the major what we should learn from the IPO? Nothing but I will say this process. What is the process we move through the IPO? One minute. First of all, what is the benefit of getting listed? Benefit of getting listed is nothing but valuation and transparency. Nothing but to avoid the unnecessary to avoid we get into the fair valuation. Nothing but to avoid unfair valuation. Nothing but private limited company may get their shares listed higher in order to avoid the unfair valuation. Okay, it's like a valuation, transparency, clear cut. It's like market demand and supply, and diversification of ownership from private limited company to public. It will diversify the ownership. Okay, and the liquidity, nothing but offer the liquidity and enhance the visibility. Any person can invest into the public company. And corporate governance and capital growth, and for the expansion whenever the IPO money get to the public, whenever the money go to the public, it will invested into the company. It will invested into the expansion. Okay, exit plan. It has a exit plan also. Promoter unlocking the value of the company, and management control. Yes, management control and provide the tax efficiency. What are the disadvantages of IPO? IPO may cost approx 15 to 25% of issue size and compliance burden, and derivate the public will be derived. Okay, what are the various compliances? This is important as a chart accountant, as a cost accountant, and as a company secretary. As a annually, so all the compliance is annually, yearly, and quarterly, and event-based compliances. Okay, what are the compliances? These are the important. Companies Act 2013 and SEBI LODR 2018 and SEBI Act 2009, SEBI Act 1992 and SEBI LODR Regulation 2015 and Security Contract Regulation Act 1956 and Depository Act and SEBI Depositories and Participants Regulation Act 2018, Bankers to Issue Act and Credit Rating Agencies Merchant Bankers Act and Substantial Acquisition and Substantial Takeover Act and Share-Based Payments Act, Share-Based Employee Benefit Act and Provision of Insider Trading. What is the minimum size? At least it should be offer these are the three types, four types. minimum offered to the public, at least 25% should be offered to the public. This depend upon the capital, okay, offer size of the capital as per securities contract, okay. Funding, what's the objective of the funding is depend upon the objective of the fund. Capital rise depend upon the specific situations. Need of the company, first of all, access of the further capital. They require the company for the capital for expansion, strong balance sheet to become a strong balance sheet, and for the growth purpose, and company to get into the global and high corporate governance and liquidity. What are the requirements of fund? Right from the going global, yes, going global. There are the two types of the growth: organic growth and inorganic growth. Organic growth is nothing but only through its example, Reliance Industries, and you can take majority industries. India, there are the two types of the growth. Two types of the growth: organic and inorganic. Organic is nothing but its growth is owned by its own, nothing but without any expansion, without any, it's only through its own company, not through any other mergers and acquisition, not through any other part. If we go through inorganic growth is nothing but it's only through pure M&A transactions, nothing but it acquire one or another. Example, you can take the major example like Byju's acquired White Hat Junior and many other Akash Academy. It's a nothing but inorganic growth. Majority of the IPO product for product development, inorganic growth, acquisition and working capital, okay, and infrastructure, marketing and retention of capital, going global, and okay, repayment of debts. And what is the options for raising? What are the various options for raising? Debt. It was a debt and equity and hybrid and exit. What's a debt? Debt will majorly come from the banks. Yes, from the banks and issuing of the debentures or bonds. Okay, and IPO is nothing but small. It may be small, medium enterprises or main board, or it may be further for the right issue or private equity, or various hybrid convertible. Okay, convertible or M&A. What are the outside? If you want to raise money in India, you can buy debt, equity, hybrid, exit. Okay. If you want to go outside India, you can raise nothing but euro convertible bonds, euro convertible bonds, American depository receipts, global depository receipts, foreign currency convertible bonds, foreign currency euro bonds, and strategic M&A. What's the major in case of you want to get listed? NSE, BSE. Okay. And we should go through what is eligibility for shares. We'll go through 1 minute. We'll go through it's a norms for the, okay, we go through the various valuations. Okay, these are the IPO conditions. Migration to main board, nothing but it's the minimum paid up capital should be, it's very important. Minimum paid up capital should be more than 10 CR, and market capitalization is more than 25 CR, and the profit and EBITDA, it should be positive, at least 2 out of 3. Okay, and it should be positive immediately, and net worth is more than 15 CR, and listing period at least 3 years, and probably minimum 250 shareholders. Okay. Approach, how can you approach business review by how can we review that? Okay, we review through issuers, major intermediates in IPO journey, issuer, intermediates and investors. Issuer is nothing but a company, the one who want to raise the capital, merchant bankers, market bankers and legal counsel, and these are the kinds of the persons who will get helping into getting listed. They will determine the price of the share, and they will act as a lead banker. They are the underwriters, they are the credit rating agencies, they are the registrars, they are the printers, they are the ad agencies, there are the many other depositors of options, and these are the investors, right from the retail investors, QAB, HNI and institutional investors. What is the board? We can go through the skills required, nothing but expert knowledge in subject matter, understanding accounts, ratios, ESG, environmental corporate governance, good drafting, patience. Okay, and what are the IPO stages? IPO stages is very important. Scalability, you should have scalability, and approval of the investors and creators, and government practices, governance practices, and setting up the process and technology automation, internal control, cultural changes, risk management, ESOP and investor relations. What is the due diligence before getting into the IPO? What are the corporate matters? If there is any matters relating to board of directors and any committees, it should be checked. And corporate structure, whether it's a debt or equity, and what is the objective of the issue, whether to expansion or okay, and capital reduction. What is the risk factors? What is the management discussion analysis about the company, what type of the company, and management and promoter group and subsidiaries. Due diligence is nothing but compliances, financial indebtedness, movable property, intellectual property rights, litigations, assets, insurance assets, and human resources. Steps before these are nothing but steps. What are the major ground steps? Nothing but ICDR regulations, eligibility of ICDR regulations, MOA, okay, and conversion of the private limited company to public limited company, dematerialization of firm, and capital history and revelation and accounting revelation, okay. And these are the review of all the important litigations, approvals, insurances, and compounding offenses, violations, and formulation of business plan, remuneration to the letter, and review of the all. Okay, these are the kinds, and we get into the kickstart. These are the we going to actually there are the two types of the fixing of the prices, right from the fixed price and book building price. Fixed price is nothing but a range of 20%. I will go through this by one. We'll go through by this. First of all, this is a process of IPO. It's very important. Process of IPO nothing but a decision for IPO. Decision to go for IPO. Appoint advisors or consultant and making IPO ready, and appointment of the merchant banker and due diligence and credit rating agencies and preparation of the offer document and marketing agencies. Appoint the intermediaries, filing of the documents with the SEBI and approval of document with SEBI, issue price and fund transfer to the issuer and listing and marking and inviting subscription. And these are the time limit is max to max. You should come within the 11 months. Okay. Okay, we'll go through 1 minute. What is the meaning of IPO? Okay, what are the types of IPO? Pricing. Okay, actually there are the two types of pricing. Fixed pricing. There are the two major types of IPO pricing is nothing but fixed pricing and book building pricing. In the fixed pricing, the company set a fixed specific pricing before getting into the public. Okay, in case of book building pricing is nothing but price band, nothing but 200 or 250. Okay, depending upon the bids. Okay, fixed pricing is nothing but company with the underwriters, right from the merchant bankers. Okay, they will consult them and announce the fixed pricing. Investor may subscribe it predetermined price. This is okay, and offer. These are the offer as a transparency. This okay, and marathon. And big building is nothing but price range between. Okay. Actually, it lead to the higher cost. You can